All right, welcome to the daily market recap for Thursday, September 25th. In this video, we'll be taking a look at the action today from the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow like we do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting off with the NASDAQ, we had our third red day in a row in the market, but pretty positive red day at that. Gap down first 30 minutes or so. We had a really brisk sell off, kind of a double bottom, and then rallied midday, a little bit more selling, and then rallied up into the close. So we recaptured the support gap, recaptured the 10-day moving average, sold down still to a little bit of space to the 20-day moving average in the secondary gap zone. But reclaiming the 10-day moving average overall is a positive reaction in my mind. We had kind of profit taking from the top, gap up, more profit taking, and then day three, first gap down in the entire kind of pullback. Probably a lot of fear in that first morning sell-off, and then buyers stepped in once again. So we do have our first gap down overall. The sooner that we can fill this gap on a closing basis, the better for the uptrend. But you couldn't really ask for better action today after the gap down, of course. S&P 500, similar action. This one did get all the way to the 20-day moving average, undercut and reclaimed that. Also held a little bit of this support gap sliver, a little bit larger of a gap down back under the 5 and the 10-day moving average, though, down 0.5% today. The IWO, these are the growth stocks of the Russell 2000, also with a gap down, also with an undercut of a support gap under the 20-day moving average. Reclaimed both of these support gaps, which is positive action overall. And now we have kind of a line in the sand to work with. Today's low, if we break that, chances are we need to go through another correction or a steeper pullback at least. If we hold today's low, hold the 20-day moving average, ideally get back over this gap down zone as quickly as possible, then the uptrend can continue. ARKK, similar action, gap down off the consolidation over the 5-day moving average. This was actually consolidating really well, no kind of warning signs here. And then big gap down, tested the 20-day moving average, bounced at that area, regained the entire support gap zone here, closed right at the 10-day moving average. But very similar to the others, we're just kind of bouncing between either the 10 or the 20-day moving average, and we want to close the gap down zone as quickly as possible. Then we have Bitcoin, or IBIT, as a way to track Bitcoin. Big relative weakness. We kind of came into the day, well, from last video, I said, I'm not sure if this is going to be a higher low overall or a lower high kind of bounce. And it looks like this was another lower high. So we have the highs on August 13th, lower high on September 18th, and now big acceleration lower on big volume today. Weakness out of Ethereum as well. So if we're using kind of IWO, ARKK, and IBIT or Bitcoin as kind of risk on, risk off parameters, IWO and RK held up okay. They're over their 20-day moving average. Use today's low as the line in the sand there. But for Bitcoin, I would say that this is a risk off signal right here. Next, we jump to the liquid leaders. I did change a couple. So I took off OKLO because I wanted to add in LEU, which is a stronger stock within that group, or at least it acts a little bit better. OKLO, overall, good action after the massive gap down today. Obviously, the gap down is not good action, but basically opened at the low, reclaimed the 10-day moving average, and closed well in the daily range. I still do have my last little sliver of this position, so hopefully that marks the low. We can rally up, close this gap, and continue higher. But LEU was just very, very strong. Let me get to that chart. Gap down, similar to OKLO, opened exactly on the low, reclaimed the 10-day moving average, reclaimed yesterday's low, reclaimed the 5-day, and put in a new all-time high close. Just phenomenal action there. Could not ask for anything more. Big pickup in volume, just accumulating all those shares. Fortunately, I don't have a position in LEU, but we'll keep an eye on consolidation or just more sideways action to see if we can get in. And then I took off CRDO, which, whoops, my bad. CRDO, which had another gap down under the 20-day moving average. It did respond well. We opened and then we rallied a little bit, but we have an unfilled gap down under the 20-day moving average. Three gap downs, kind of similar to why I took ALAB off the list. And I added instead MP, which very similar to LEU, just incredible action today. We did gap down at the open, found buyers at the 20-day moving average, reclaimed the 10, then the 5, then the high volume close from earnings was up about like 12% or right around 12% at one point, right near all-time highs, and then closed a little bit lower in the range, but really good action out of MP. CLS, we talked about how this was a little bit weak yesterday. Sorry, my internet's a little slower today. CLS was weak yesterday. We had that false breakout on Tuesday, followed through lower after a gap down on Wednesday. Today we had a big gap down, open on a low, reclaimed the support gap high, reclaimed the 20-day moving average, yesterday's low and close. Did kind of stall out at the 5 and the 10-day moving average. So we'll see how we respond to that area. But really just want to hold like over the support gap area here. Next, we have APP, little gap down, absorbed, close over the 5-day moving average. Really strong price action here. Google, perfect undercut and reclaim the support gap low. Couldn't ask for anything better there. Did close red on the day, down 0.55%. We do have this small gap down. Ideally, we would have closed that. But overall, good action on the Google. Alibaba down 0.5% after yesterday's 8% day. Nothing to complain about there. Continues to hold over the 5-day moving average. Again, this is breaking out of a 3.5-year base. Chinese stocks are a leading theme in the market. This is the liquid leader of that theme. PE, big gap down, basically our third gap down in a row. Reclaimed that support gap, yesterday's low, the 20-day moving average, and the secondary support gap here did close down 0.6, 0.7%, but really strong action here. Definitely don't want it to take out today's low. Tesla, a little bit of weakness here. We did gap down and just kind of had steady relative weakness the entire day. So I'm not sure if that's just one day of weakness. We did have less volume today than yesterday, which a lot of stocks can't say. So lower volume pullback under the 5-day moving average. First close under the 5-day since this breakout started. So we'll see if that's like an end of momentum or just a quick shakeout, some profit taking while the market came under pressure and the stock already made a big move. Support gap 10-day moving average is a spot to watch tomorrow. And then finally, NBIS down 4.7%, still closing over the 5-day moving average, not doing anything wrong there. Getting into the industry ETFs, let's sort this by price percent change today. Couple stocks or couple ETFs that I wanted to cover. XME, this is the metal and minings ETF, opened right near the low of the day at the 10-day moving average, reclaimed the 5-day, new all-time high closing price after making an all-time high, intraday price action. Good move there. Gold miners closed back over the 5-day moving average with some strength. We'll see if we continue to trend here. We've had a trend of expansion over the 5-day, pull back into the 10-day. Haven't even pulled back into the 10-day yet, so pull back into there would give us pretty good risk reward if that trend is to continue. If we lose the 10-day moving average on a closing basis, then gold miners might need to correct a little bit more. NLR, this is a nuclear and uranium themed ETF. Big gap down with Oklo, LEU, UUUU, bunch of those stocks. Great action. Opened near the low, reclaimed the 10, the 5-day moving average, closed up 1%. Solar stocks, which we're going to see a lot on the long watch list, just picture perfect action today. Undercut the 20-day moving average, the support gap, almost to the penny. Rally back through, reclaim the 10, the 5, yesterday's close, up 0.9%. XLE, this is kind of just really getting to a market that's anything energy is going up. Now we have oil and gas that has been consolidating for multiple weeks now, really not showing relative strength up until the last couple weeks. Couple higher lows on the 50-day moving average. An island gap down on Tuesday that undercut and reclaimed the support gap, the 50-day moving average, followed it up by a gap up, secondary gap up, and then relative strength today. KWEB, Chinese Internet ETF, consolidating perfectly after a close under the 10-day moving average, then gap up yesterday. Couple warning signs here. XLF, financials ETF, we did close under a support gap and under the 20-day moving average. Had a weaker closing range than the indexes and some other stocks in the market. We did uppercut and fail at the resistance gap here. So one thing to watch for is potentially a failed breakout. And if financials are starting to roll over, that's not a good sign for the market. What else? XLP, not really a theme that I look at a lot, consumer staples, but this looks like it's about to enter a stage four decline here. Um, Gap up actually compared to the rest of the market, immediately sold off, closed on the low of the day on a pickup in volume. A lot of these stocks are like lower ADR, so I don't trade them, but not great sign for the economy here. Next, we have XLB, kind of similar to XLP, where a bunch of names that I don't tend to trade, but not good price action. Gap down off the highs. We have another gap down, resistance gap, because we uppercut and failed at that level at the 20-day EMA. And then just 3 days of selling in a row. Today, big gap down, open on the high, close near the low. Looks like we're going to be testing that 200-day moving average again. And hopefully we find support there. And this is just another higher low, but short term, not solid price action there. ITB, home builders losing the 50-day moving average, tried to rally intraday, close at the low of the day. Not great. The 200-day moving average is still in a downtrend at this point, so you do have to expect a lot of volatility. You want to be buying stuff like this on shakeouts, not on strength. But very quickly off the highs, losing the 5, the 10, the 20, then the 50. Not great price action. Biotech ETF down today to the 10-day moving average with a gap down, which is not ideal. I have a position in LABU, so this isn't the best action for me. It did come on slightly less volume than yesterday, and overall, the 200-day is just going flat now. So if I have a position in this, I do have to expect a little bit more volatility. And this is really just the first strike against the setup. Otherwise, like consolidation, uptrend, consolidation, uptrend, consolidation, uptrend. Now, maybe just in a consolidation phase. XLV, the healthcare ETF, gap down, open on the high, closed near the low on big volume, losing the 50-day moving average. Now we did undercut and reclaim a support gap, but really this is just in a stage one base. There's going to be a lot of volatility in a stage one base. You're still below a declining 200-day moving average. So healthcare as a whole, just under a lot of pressure here. The market obviously does not like what's going on. XRT, the retail ETF, gap down, losing the 20-day EMA. So this could be a snap of an uptrend. And then MSOS, really thought that this was going to fly. Today got stopped out of this position. A little bit of actually an uptick in volume. When I got stopped out, it was lower than pretty low average daily volume, but closed right on the low of the day. Still, the 50-day moving average is coming up to that price, 200-day going flat. So we'll see how we can respond to that 50-day moving average, maybe the gap zone at 414. Otherwise, ugly close followed by a gap up, potentially buyable versus today's low. Before we get into the long setups, we do have an updated exposure level from the NAAIM. This is the active investors' actual exposure levels as of Wednesday's close. Typically, what I want to see, well, what I am cautious about seeing is any number over 95%. If everyone's already long, then who's left to buy? That's more potential selling pressure if things start cracking lower. But we are not there yet. Once again, we are still kind of not underbought, but not overbought either. We only ticked up 1.5% from last week, from 84.7 to 86.2. So at this point, it's really just not a signal to me. I have that 95% threshold, which going to one of the tweets that I posted on June 7th, the three warning signs that I'm really looking for to get concerned about the market. NAIM exposure level over 95%. We're not there yet. Unfilled gap downs, multiple on the indexes. Today was our first gap down. So this is literally the first time that I'm getting a little cautious on the market. And then large volume breakdowns of liquid leaders. I had a bunch of liquid leaders here before. If we go to like the leaders list, we've kicked out a bunch of stocks this week. We kicked out CRDO, we kicked out ALAB. BE had a break from its highs. Oklo we kicked out for LEU, but Oklo kind of a lot of volatility here. So it's not overly concerning just yet because exposure level is still not overbought, but we are kind of getting mixed signals here. So if anyone's saying, of course, like the market's just going to rip higher, I'd be a little bit cautious there. If anyone says, of course, the market is just going to crash here, I would be a little bit cautious there. For me, I'm getting mixed signals. So when I get mixed signals, I just try to size down. I try to play both sides, both long and short. Whichever way I get traction, I start feeding more into that direction. So speaking of that, let's go through some long and short setups going into tomorrow. We'll do this most liquid to least liquid by average dollar volume. So first one, Tesla. Again, lower volume pullback today. I don't love the gap down, but a test of the 10-day moving average, first test of the 10-day, and an undercut of the support gap. That's a spot that I would look to add to my Tesla position. That's like a spot to watch. I think the best spot for to really kind of like size up this trade is the secondary support gap at like 411, 410 area. So I've got alerts kind of at both of these, and we'll keep an eye on both. But Tesla coming out of a multi-month base, getting close to new highs, big volume on that breakout. First pullback to the 10-day moving average and support gap, usually a good risk reward spot. The 20-day is a little bit better for that, but we'll keep an eye on that area. APP, similar idea, pull back to the 10-day. With this, I want to undercut today's low, the 10-day EMA, and then get under the support gap right at 607-ish area. Reclaim of that would be the buy spot versus whatever the day's low is. CRWV had some good relative strength earlier in the session, uppercut and failed at the previous highs, the resistance gap. So whenever we have a overhead resistance gap, I just don't buy those stocks on strength. I always look for an undercut and reclaim as it pulls back. So with that in mind, that's exactly what I will be doing. Undercut of the 10-day moving average, the support gap from 121.30-ish area would be buyable versus the 20-day EMA. SoFi coming back into the 20-day moving average today and bouncing. Uh, we do have some weakness in XLF, which is like SoFi's kind of financial, kind of software, kind of a mix between. We'll look for an undercut of the support gap, the 20-day moving average as a potential entry spot, and then manage my risk 2 or 3% or the low from September 17th. MP, awesome action today. Got a little extended. What I would look for here is a little gap up in the morning, pull back into the high volume close, or just like the kind of closing price from earnings. It actually wasn't a ton of volume on that, but that earnings close, play that versus either the 5-day or the 10-day moving average. Because relative strength like this, if the market's going to continue higher, relative strength like this usually leads to way bigger moves to the upside. Now we get into some of the solar stocks. First Solar is up first. Great action today, undercutting the 10-day moving average, undercutting the support gap, reclaim both, closed at a new 52-week high. This is, again, the 200-day is just starting to slope up, so it's not something that I want to buy on strength. If you look at all the solar stocks, they're not things that you want to buy on strength just yet either. Watch for a pullback into the support gap low. The 10-day moving average will catch up to that right around 215.50 as the entry. Stop would be today's low. NXT, very similar idea. This is also a solar stock, solar IPO that's just made a new all-time closing high. Very good relative strength compared to the rest of the market. We've talked about solar stocks on this channel like constantly from the bottom, and they're really starting to shape up. A lot of them are starting to work now. Pullback into the 10-day moving average and support gap is buyable versus today's low and the 20-day EMA. The Sphere from Las Vegas is now on my radar. Good consolidation the last 3 days over the 10-day moving average. A little bit weaker close today, but look at how light the volume was compared to all the rest of the names. Here, I would be looking for a gap up in the morning, then an opening range break to play versus either like You could play it against the 10-day or the low of the pullback. I think the low of the pullback is only like 2 or 3% anyway. So we'll see what tomorrow brings. Some people might want to wait until the break of today's high, which is fine, but then you have to kind of extend your stop, widening your risk, lowering your position size a little bit. So a couple different ways to play that one. We covered the strength in XLE. PARR is the strongest stock within that group, I think. Still kicking myself for not buying this on September 23rd. Gap up, opening range break through those highs on big volume. Consolidation day yesterday. Consolidation day today over the 5-day moving average, but closes positive. Through today's high is buyable, but I don't tend to like to buy oil and gas names on strength. Well, personally, I like to buy most things on weakness and on shakeouts, but because we're seeing rotation into oil and gas, I think it's fine to buy on strength here. You just have to size it a little bit lower because you're a little extended from the 20-day here. In a perfect world, we get a pullback in XLE in some oil and gas names, and then we pull all the way back to $35, the 20-day moving average, and that gap zone as a potential entry. And last, we have AEHR. This is a semiconductor name, which has been responding like really well to the market. Rallied from 650 up to $34. First test of the 20-day moving average when it aligns with the gap zone is a spot that I almost always have to take those trades. So we'll have alerts right around that area as a potential undercut and reclaim. Stop would be whatever the low of the day is on that undercut. Getting to the short setups, same thing, most liquid to least liquid. First one we have is Oracle. We now have 3 gap downs in a row after rallying right back up to the HVC, the high volume close from earnings, when it was up 35% on massive volume. If you take a look at like other stocks that have already been in uptrends, then make this really big, like massive volume move, that tends to be like towards the end of the move, not the beginning. And it looked like maybe we could reclaim that HVC and start trending higher again. That was not the case. We got right up to that area. And the last thing that you want to see after strong price action comes back up to a key spot, whether it be an HVC, key moving average, round number, previous highs, anything like that. The last thing that you want to see right after a close there is an unfilled gap down. And that's what we got here, followed by another one, followed by another one, losing the 5 and the 10-day moving averages. Now, I don't want to short in the hole here. I want to wait for a rally back up through those moving averages, through the top of the gap zone at 308 as a potential entry, and then stop. You could use 2 or 3% there. Microsoft, this closed under a support gap today, under the 20-day EMA. It did so on declining volume, but a little bit weaker closing range compared to the indexes. Name that already had a huge volume move on earnings that sold off, and we've basically been seeing weakness since that earnings gap up. We're under the 50-day moving average, and this is one that I can trade in my retirement account because there's inverse ETFs here, which most of my trading is done in my retirement accounts. Either a uppercut and fail of the gap zone of the 5-day moving average on strength tomorrow, or a gap down opening range break versus that same spot is the play there. Meta, similar to Microsoft, had a big gap up on earnings July 31st. We lost that area, rallied right back up, made new highs, or got right at new highs, but into this resistance gap. We never were able to close above it, so sellers stepped in again. We have evidence of that. Next day, we lose the HVC from earnings. Next day, we follow through, losing the 20-day consolidation, then another gap down, lose the 50-day moving average. Again, don't want to short in the hole here. Rally back up to the 5, the 10, the 20-day moving average, and the gap zone at 760 is the spot to watch. And we've seen other mega caps names like Amazon, like a ton of weakness out of Amazon. So if we're going like one mega cap at a time starting to fall apart, I think Meta and Microsoft can be the next ones. Costco, this is in my eyes in pretty big danger. We're below a declining 200-day moving average now, closed week today. And if you take a look at all the other like food related stocks, SFM, another grocery store in a major stage 4 decline at this point. Other food stocks, I know it's like more like fast food, but still food related. Chipotle stage four decline. Sweet greens, stage four decline. You see, I haven't even looked at this chart in a very long time. What else? Chipotle, Kava, not doing well. Um, Toast, below a declining 200-day moving average. So that entire theme is very weak. And I know like Costco is kind of a mix between food and retail. But if we're starting to see Amazon break down and food stocks have already started their stage four decline, now Costco's below a declining 200-day moving average. This is a do or die spot for the stock. If we lose today's low, I think it's a lower ADR name, so we could still like kind of bounce around. But I think a close below today's low, and this is in major danger to start a stage four decline. EEV, we've seen power stocks power higher. GEV not actually responding very well. Gap down today, lost the 5, the 10, the 20, and the HVC from the earnings. Closed a little bit weaker in the range compared to other stocks. It did have a nice rally. We did hold the support gap. So if there's a support gap right below price, that's not where I want to short. I want to see a rally back up through the moving averages. So get everyone interested. Uppercut and fail at that HVC, that 629 area as a potential entry for the short. Stop would be the high of this pivot at 647. SMR, this is in that nuclear theme. OKLO or LEU in my mind is the strongest. Then we have OKLO. And then if you're going to short stuff, don't waste time trying to short the strongest stocks in the market. It makes you look really good on Twitter, but it's super frustrating. You lose a lot more. And why not? Like, we're trying to buy the strongest stocks in the strongest themes. You can also short the weakest stocks in the themes that you might think are extended. So SMR, we've already seen a rally back into a resistance gap, a another uppercut and fail of that area. So we're at a key spot. What do we not want to see? We don't want to see an unfilled gap down. What do we get? An unfilled gap down. Down to the 5-day. Next day, we lose the 50-day and the 10-day. Another gap down today, losing the 20-day. We do bounce at the support gap. So we don't want to short this in the hole, already down 4 days in a row. Let it rally up through the gap zone, get to the 50-day moving average around 40.40 as a potential entry, and then the stop would be the high from September 24th. Same exact thinking with from SMR with QUBT. The strongest quantum name right now is RGTI, which was this up today? Yeah, up 1.4% after a big gap down, bounced to the support gap. Chances are RGTI goes higher. IONQ a little bit weaker. We had a gap down. We closed red, down 0.6% or down 6%. We lost the 5-day moving average. Now, what's the absolute weakest? Think about if you're trying to like fight Pokemon evolutions. Do you want to try fighting Charizard, shorting Charizard, or do you want to short Charmeleon? I would rather short the weakest stock in that bunch. QUBT, big gap down after I think it was an offering, rally back up, lower high, gap down today, close under the 5-day moving average. This, I just want to see a morning rally, then a loss of the daily VWAP as the entry. Stop would be either yesterday or today's high or whatever the high of the day is. And then the last two that I always have on the short watch list because I think they're eventually going lower is NEGG. Already made the big momentum move from $3 up to $130. Lost all, not all of that, but a huge chunk down to $30 in just like 7 or 8 trading days. Rallied back up to the 50-day moving average. Distribution day on the 22nd, down 20%. And then we're just kind of creating this little bear flag of lower highs and lower lows the last 3 days. With this, I would be looking for a gap down, opening range break to short, or an uppercut and fail of the 5 and the 10-day moving average. Also want to be on the lower side of the daily VWAP when I short that. With any momentum names, like if you're below the daily VWAP, it's okay to short. But this has proven that it can make some pretty ridiculous moves to the upside. So if momentum is going to come back to the market after a 2.5-day pullback that we got, don't want to fight price if it gets over the daily VWAP. And finally, ZEPP, another weak day here. We just have been consolidating basically since September 3rd. Rallied up, gap down, gap down. So 3 gap downs off the highs here. Today we closed right at the 20-day EMA. Really thought this was going to just roll over today, but it held in there okay. Gap down, opening range break would be the short versus today's high, the 5 and the 10-day moving average as the stop. So that's going to be the daily recap for Thursday, September 25th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in the weekend video.